I think it's ironic considering that the foundational premise of crypto, like Bitcoin, is to eliminate intermediaries, champion decentralization, and promote permissionless and non-custodial financial system. So we've come all this way for what? So that investors can trade Bitcoin during market hours via custodians and brokers? Shout out to MetaMask Portfolio, your one-stop shop to track and manage your Web3 assets in one place. More on them later. In this, a historic week for crypto and Bitcoin, week starting January 8th, we'll be going over the main headlines and news of the past few days. Of course, this week was all about the spot Bitcoin ETF getting approved by the SEC. There's basically no other topic to discuss in crypto and DeFi, really. So let's get to it. On January 10, the SEC, that's the agency that regulates securities in the US, approved for the first time ever for exchange traded funds to hold Bitcoin, spot Bitcoin. Remember that there were ETFs holding futures, Bitcoin futures before, but there have never been ETFs holding spot Bitcoin trading in the US before. And this has been obviously a long time coming. The first Bitcoin ETF filing happened back in 2013 by the Winklevoss twins. And the SEC has been continuously been rejecting and denying ETF applications until this week. So huge moment for crypto, for Bitcoin. The expectation obviously is that with spot ETFs now available for institutional investors, there will be hundreds of millions of dollars flowing into buy these ETFs. And because these ETFs hold actual Bitcoin, then that will translate into actual demand to hold Bitcoin, which will push prices. That's kind of the general expectation and speculation. It also means that Wall Street is getting more and more comfortable with holding Bitcoin as an asset class. It'll have a more lasting position in different portfolio managers' portfolios. And so it's just another sign that crypto is growing up. It's getting accepted in Wall Street, and it's just becoming one more asset class together with equities and bonds and commodities. Digital assets are now a part of any, institutional investors' portfolio with this spot ETF. So, a huge time for crypto. It was a really successful first day of trading for these ETFs. They did over 5 billion in volume. To note, all 11 ETF applicants who filed to list spot ETFs were approved. Some of them include BlackRock, Fidelity, VanEck, Bitwise, and many others. BlackRock, of course, is the big one. That's the world's largest asset manager, and they did kickstart this whole process in June when they filed their ETF application. That kind of kickstarted this speculation that we would finally get a spot Bitcoin ETF because BlackRock has had a really successful track record of getting its ETFs approved. So as soon as they did that, everyone kind of assumed that they would be the ones to push the Bitcoin ETF over the line, and they did. So on Thursday, all of these ETFs started trading and did a huge amount of volume, 5 billion in total. GBTC was the one who did the most volume at over 2 billion. The BlackRock ETF came next, and then the Fidelity ETF came after that in terms of the highest volume. So very successful. It was the most volume traded for the first day for the launch of an ETF in history. So it just goes to show that institutional investors at Wall Street were waiting for this product, that they were waiting to get their hands on this Bitcoin exposure. So I think it's just it's a good sign for things to come for these Bitcoin ETFs. It's also worth noting that as it often happens in crypto, the lead up to the approval was pretty wild. The day before it was approved, the SEC Twitter account had posted a tweet saying that the ETF was approved, but shortly after retracted that tweet saying that their account had been compromised. And Gensler also warned people that the SEC hadn't actually approved the ETF yet, and that the SEC's account had been compromised. This is just so ironic, coming from an agency that has been warning investors about how easy it is for crypto for investors to get scammed in crypto, and how risky it is. But then they're the ones who have their Twitter account hacked. They're the ones who are supposed to be arguing for investor protections, but they cannot protect their own Twitter account. So that was pretty ironic. Do more in Web3 your way. MetaMask Portfolio provides a secure, easy to use, and convenient access to a wide range of Web3 features and services all in one place. View and manage all your coins, tokens, and NFTs in one place by connecting your MetaMask wallet or importing multiple wallet addresses. You can also buy, sell, swap, bridge, and stake within the app, finding competitive rates and options among their vetted list of providers. Instead of connecting to multiple exchanges and tools, you just need to connect to one simple app to navigate your Web3 journey. Something else that was quote unquote funny, or maybe more pathetic than funny, was Gary Gensler's statement, where he said that even if they were approving the Bitcoin spot ETF, they weren't endorsing Bitcoin itself, as it's, he again was saying that Bitcoin was a source for money laundering and trafficking, and all the tired criticism that he has for Bitcoin. So very petty for him to choose the moment that he was approving the Bitcoin ETF to take that as an opportunity to criticize Bitcoin again. It's very clear that the SEC under Gensler approved the Bitcoin ETF because they had no other choice. They were really forced to approve it. And that's because the U.S. courts ruled against them in the case with Grayscale. So Grayscale appealed their denial of changing GBTC into an ETF, and the court ruled that the reasons that the SEC gave for denying the ETF, which was that Bitcoin markets can be easily manipulated, aren't good arguments, because Bitcoin futures have already been approved, and Bitcoin futures ETFs are trading. So if the market is stable and robust enough for Bitcoin futures ETFs, then it should be stable and robust enough for Bitcoin spot ETFs. So that's how the courts ruled, that basically pushing the SEC to approve a spot ETF, and so that's what happened. And Gensler actually pointed to that reasoning in his statement. So very successful first week of trading for Bitcoin ETFs, and that was pretty much, all of the news this week. It was all about the Bitcoin ETF, about the fee war that happened with the 11 issuers. Everyone was kind of cutting fees, trying to make their fund the most enticing for investors. Bitwise ended up being the one to offer the lowest fee at 0.2%. BlackRock's fund has 0.25% in fees. So fees are already, started out at kind of rock bottom relative to other ETFs. And somebody was saying that it's even cheaper to buy Bitcoin through an ETF than an exchange because, fees are so low. So it's really, a cutthroat competition between all of these ETF issuers. Interesting that the market reaction for the ETF approval has been pretty muted. So it wasn't exactly a sell the news event. So it's not like Bitcoin dropped after the ETF approval, but it hasn't really rallied either. It's been relatively stable at the level it was before the ETF was approved. So right now, Bitcoin is trading at around 46,000, pretty much near the level it was before the approval. What's been interesting to see is that Ethereum is actually outperforming Bitcoin since the approval of the ETF. We had reported that the ETH BTC ratio was at the lowest since May of 2021, right before the approval. So that's because Bitcoin had rallied up to the approval of the ETF and rallied faster than ETH. So it had been outperforming ETH. And so this ratio of ETH against Bitcoin had been going lower and lower and lower until it got to the lowest since May of 2021, oversold on the relative strength index. And we reported this. And then, of course, we timed this article pretty perfectly because that was the bottom of the ETH BTC ratio. And after the approval, it really did start to reverse. So now ETH is outperforming Bitcoin. And the idea is that with the Bitcoin ETF news out of the way, the next step will be an approval of an Ethereum ETF. And that decision is due in May. So you can kind of predict that now all the narrative will change to Ethereum. So that's something to watch. ETH BTC ratio climbing from the bottom, and I think that's that's a lot of ETF news to digest. We had a couple of non-ETF news, which I'll quickly go through before I give you my hot take on the Bitcoin ETF. So PayPal stablecoin PYUSD is really picking up steam. It's grown 70% in the past 30 days, and it's getting more and more. It's making more inroads in DeFi with two pools in Curve and with a vote to include it as part of Aave's collateral. There's also, we have an exclusive interview with Dominic Williams of DFINITY about the internet computer protocol and DFINITY. He's saying that it'll be all about enterprise use cases for ICP. And we also have Fox Corp releasing a protocol for verifying content together with Polygon. Super interesting stuff. And those were the main kind of non-ETF news. Okay, and now for my hot take on the Bitcoin spot ETF. It's a bit of a contrarian take, so I'll be interested to hear your thoughts on this. So here's what I think. I think the approval of the Bitcoin spot ETF is undoubtedly a milestone, and it makes it easier for investors to invest in crypto. But it's essential to consider the implications of essentially packaging Bitcoin in a fund format. This approach essentially plays into the hands of Wall Street intermediaries, who are set to layer fees on top of these products. I think it's ironic considering that the foundational premise of crypto, like Bitcoin, is to eliminate intermediaries, champion decentralization, and promote permissionless, and non-custodial financial products, and a permissionless and non-custodial financial system. So we've come all this way for what? So that investors can trade Bitcoin during market hours via custodians and brokers? Don't get me wrong. Again, I think this is an important milestone. I think it's great that investors have an easier way to get access to crypto. But I would save this kind of excitement for a time when Wall Street is actually adopting crypto and blockchain technology and using it how it's supposed to, when it's, blockchains are being used for the backbone of settling securities, and when banks are interacting directly with blockchain protocols and interacting with smart contracts and staking and trading on dexes, using crypto like it's supposed to be used, not through the same old financial rails that crypto is trying to replace. Crypto at its core is about empowering individuals through non-custodial and permissionless financial instruments. The creation of a spot Bitcoin ETF, while beneficial in terms of broader market exposure, seems to deviate from that path. It ties Bitcoin closer to the traditional financial system that it originally thought to challenge. Isn't the true revolutionary potential of crypto found in its ability to offer an alternative to those traditional systems rather than conforming to them? So excitement surrounding Bitcoin ETFs might be somewhat misplaced. Are we celebrating crypto's integration into Wall Street, or are we witnessing a subtle transformation of crypto to fit into a pre-existing financial mold? People argue the ETF is a Trojan horse for Wall Street to adopt Bitcoin, but I think it's the other way around. I think this development could lead to more conformity of crypto assets to traditional financial models. If investors can easily access Bitcoin through a familiar plain vanilla ETF, what incentives do they have to engage with cryptocurrencies in a more direct, non-custodial way? The true essence of crypto lies in its ability to offer an alternative route to financial engagement, one that's decentralized and free from the control of traditional financial institutions. So with the approval of a Bitcoin ETF, it's a significant event for crypto for sure, but it's also crucial to reflect on what we're really celebrating. Are we moving towards a future where crypto is merely just another asset class within Wall Street, or are we striving to maintain the revolutionary spirit that birthed Bitcoin? So would love to hear your thoughts. Again, I think this is great news. I'm not saying it shouldn't happen or that it's bad, but I think, all this excitement is a little bit misplaced. Anyways, hope you can join me again next week for another episode of Crypto with Cami. We'll be sure to cover more Bitcoin ETF news, but hopefully we'll mix it up with other DeFi developments as this huge explosive news starts to fade out. I think maybe a lot of you are just Bitcoin ETF'd out a little bit. Anyways, see you next week.